The U.S. government is buying its own future.
Massive shift in Washington. Trump's equity revolution just went global.
America's silent revolution exposed. 5 moves reshaping world power.
China's supply empire faces its biggest threat yet, and it's coming from inside the U.S.
No press release, no public vote. Just 5 secret deals signed in silence. While Americans argued about tariffs, Washington quietly began buying the companies that power the modern world. Lithium mines, rare earth plants, semiconductor giants. The United States is no longer just regulating industry, it's owning it. Insiders call it the silent revolution, and if it works, it won't just end China's dominance, it could make America the most powerful manufacturing empire in human history. For years, America's biggest vulnerability wasn't military or digital, it was material. The minerals, magnets, and microchips that make everything from fighter jets to iPhones mostly came from somewhere else. China controlled about 70% of global rare earth processing, 60% of lithium refining, and a huge slice of chip supply equipment. Every EV motor, every missile guidance system, every smartphone battery, almost all ran through Beijing's industrial web. When supply chains cracked during COVID, the alarm bells rang, but policy never caught up. Instead of rebuilding production at home, Washington threw money, subsidies, tax credits, and hope. Then came 2025. A very different idea entered the room. What if America stopped paying companies and started owning them? Reuters confirmed it first. The Department of Defense quietly purchased a 15% equity stake in MP Materials, the only U.S. company mining and refining rare earth metals at scale in California's Mountain Pass. Not a grant, not a loan, a stake.
The Pentagon now sits on the same shareholder list as Wall Street. Why? Because every F-35 fighter jet needs about 900 pounds of rare earth magnets. Losing access isn't a risk, it's a national emergency. By taking equity, the Defense Department locked in supply for military programs worth over $1.2 trillion while securing dividends and board oversight, an industrial alliance not seen since World War II. 8%, that's the planned U.S. stake in Tanbreez Mining, a Greenland-based rare earth project sitting on one of the richest deposits outside China. It's cold, remote, and politically delicate, yet strategically priceless. Greenland's Kvanefjeld and Tanbreez fields could supply 15% of the world's rare earths if fully developed. By taking partial ownership, Washington isn't just diversifying supply, it's anchoring influence in the Arctic, a region increasingly eyed by Russia and China. A mine deal becomes a geopolitical base. In October 2025, the White House authorized the Treasury and Energy Departments to acquire up to 5% in Lithium Americas Corporation, including its joint ventures around the Thacker Pass project in Nevada, the largest known lithium resource in North America. Why Thacker Pass? Because the U.S. imports roughly 80% of its battery-grade lithium. By owning a slice, Washington gains leverage over pricing, environmental standards, and export controls. The deal's valuation, around $650 million, may seem modest, but its impact, massive. It creates the first vertically secured battery supply line fully under U.S. jurisdiction. While most coverage focused on EV subsidies, a smaller story hid in plain sight. The Department of Energy is in talks to buy equity in USA Rare Earth, which controls the Sierra Blanca mine in Texas and a new magnet manufacturing plant in Oklahoma. Magnets are the final link in the rare earth chain, the piece China guards most fiercely. If this deal closes, America would own the only mine-to-magnet pipeline on its own soil. That means thousands of jobs, a resurgent industrial belt across the South, and a new magnet export industry to Europe. It also means China loses its monopoly weapon, the ability to cut magnet exports overnight. The fifth and most symbolic move, a 9.9% government stake in Intel. It's not about profit, it's about presence. Intel anchors U.S. chip fabrication capacity against Asia's TSMC and Samsung. By taking a minority share, the U.S. Treasury effectively cemented a say in domestic semiconductor policy while backing a $30 billion expansion of fabs in Arizona and Ohio. Each fab means thousands of jobs, billions in regional output, and a safety net against a future Taiwan crisis. This is industrial policy turned into ownership, and it marks the first time in modern U.S. history that the federal government has held equity positions across multiple strategic sectors simultaneously. Critics call it state capitalism. Supporters call it realism. China used state ownership to build industrial dominance. The U.S. is now mirroring that play selectively. The difference? Transparency and alliance. Each stake requires joint private management and public accounting under the Federal Investment Reform Act of 2025. That law lets Washington exchange grant funds for equity in critical infrastructure and supply chain assets. Early analysts estimate a total exposure of roughly $18 billion across the 5 deals, a fraction of the $52 billion CHIPS Act budget, but with direct control leverage many times higher. The goal is not just returns, it's resilience. Every share owned equals a line of supply secured. We've seen this before, during the 1940s when the Reconstruction Finance Corporation took stakes in steel, rubber, and aviation to arm America for war. By 1945, those temporary equity positions helped create the arsenal that won World War II and then funded post-war boom infrastructure. The same blueprint is re-emerging now, except this time the enemy isn't a nation, it's dependency itself. 5 moves, 5 signals to the world. America is done renting its future, it's buying it back. Every stake sends a message to Beijing, America is rearming its factories. Every mine developed, every plant opened is a piece of economic sovereignty restored. The short-term numbers are modest, tens of thousands of jobs, billions in capital flows, but the strategic implications are staggering. Because for the first time in a generation, America has a plan that doesn't depend on anyone else. And this is just the beginning.
The ink on those equity contracts was barely dry when markets felt the tremor. Investors called it interference, economists called it protection, but for Beijing, it looked like defiance. Within days of the MP Materials announcement, the Hang Seng Rare Earth Index dropped 4.8%. China's Ministry of Commerce quietly warned that U.S. national ownership of foreign mineral assets would destabilize trade norms. Translation: Washington had touched the one lever Beijing could never tolerate, supply sovereignty. By mid-October 2025, global lithium futures in Shanghai were up 12%, while U.S. benchmark lithium carbonate prices stayed flat. The message was clear: America's partial control was already stabilizing its own market as China's tightened. The Department of Energy projects that the new battery corridor around Nevada and Oklahoma could support 67,000 direct and indirect jobs by 2028. Intel's Ohio fabs alone add another 10,000 permanent positions. That's not stimulus, that's structural change. The U.S. share of global chip output, once 12%, is forecast by SEMI to climb past 18% within 5 years if these stakes hold. In real terms, that's a $1 trillion swing in industrial value toward American soil. Every move has a countermove. China responded by announcing new export license rules covering 0.1% thresholds of Chinese origin rare earth material, a bureaucratic tripwire for Western supply chains. But here's the twist. Many of the minerals in question now trace back to US-funded operations, so each new restriction weakens Beijing's leverage instead of strengthening it.
Meanwhile, allies are watching. Canada's Mark Carney floated reviving the Keystone XL pipeline as part of a North American resource pact. Australia's Lynas Rare Earths announced a joint processing deal with Texas investors linked to USA Rare Earths. The 5 moves may soon multiply into 20. Critics ask, isn't this just government playing venture capitalist? Maybe, but look at the numbers. Average federal return projection, 4.6% annual yield. Expected tax revenue recapture, approximately $3.2 billion per year by 2030. Estimated public debt offset from dividends alone, 0.07% of GDP. Those aren't subsidies, they're assets. Every percentage point of ownership represents cash flow back to taxpayers instead of corporate write-offs. For a century, U.S. lawmakers swore off direct industrial ownership. Now that taboo is broken. Congressional hearings in late September 2025 saw both parties split in unusual ways. Fiscal conservatives praised the self-funding model, free market libertarians warned of mission creep, labor unions called it the first policy in years that treats workers as strategic assets. Poll aggregators from YouGov and Ipsos show 64% of Americans support temporary government stakes in critical industries if it reduces Chinese dependence. That is the highest approval rating for an industrial policy since the 1960s space race. Financial analysts now speak of a public-private supercycle, because as Washington buys into industry, private capital follows in fear of missing out. Intel's share price rose 11% after the Treasury stake news. MP Materials jumped 51%. Barron's October 8, 2025. That market momentum signals a new psychology. Government investment as a confidence indicator, not a warning sign.
And it ripples down to everyday life. Lower import volatility means steadier EV prices. Secure semiconductor capacity means fewer consumer electronics shortages. In a world haunted by supply crises, stability is the new wealth. Inside the Pentagon's Logistics Command, planners are already running new simulations. If the US controls even 25% of its critical minerals domestically by 2030, wartime readiness costs could drop by 40%. That's not ideology, that's national insurance. And there's a bigger picture still unfolding. By owning stakes in green and digital supply chains, the US is quietly building a shadow sovereign wealth fund, one that earns returns while defending strategic interests. Analysts at Brookings call it the first American model of industrial sovereignty. Every revolution has its price. Ownership means exposure to market risk and political temptation. If global commodity prices crash, taxpayers take the hit. If future administrations politicize board votes, corporate confidence could evaporate. But the numbers still favor boldness. China's share of rare earth exports has fallen from 92% in 2010 to 71% today. US domestic output is projected to quadruple by 2028. The trend line is already moving toward independence. Perhaps the most stunning change isn't economic, it's psychological. For decades, Made in America was a nostalgic slogan. Now it's a portfolio line. College graduates see defense, energy, and semiconductors as patriotic careers again. Venture funds brand themselves as sovereignty capital. And in factory towns from El Paso to Erie, the phrase federal stake no longer sounds like control, it sounds like commitment.
This is what happens when a nation decides to be the producer, not the consumer. Let's recap the numbers for clarity. MP Materials, 15% Pentagon stake, $2.1 billion valuation. Tanbreez Greenland, 8% planned stake, approximately $400 million. Lithium Americas, 5% combined stake, approximately $650 million. USA Rare Earth, talks for 5 to 7% equity, approximately $500 million. Intel, 9.9% treasury stake, $13 billion market value portion. Total exposure, about $19 billion. Expected industrial output impact by 2030, $1.1 trillion. That's a leverage ratio of nearly 60 to 1. In finance, that's called transformative ROI. Economists describe three forms of power: military, monetary, and manufacturing. For years, America excelled at the first two and outsourced the third. This policy sews them back together. By owning the means of production for critical technologies, the US links its currency strength to tangible output again, something the dollar hasn't had since the 1970s. And that could reshape global finance in ways no one is ready for. Beijing isn't standing still. State-owned CMOC and Northern Rare Earth have announced joint ventures in Africa and Latin America to offset US encroachment. Yet, their logistics costs are rising, their export quotas shrinking, and their buyers diversifying. The silent revolution in Washington is forcing China to play defense for the first time in 2 decades. And the world is taking notes.
If these stakes survive political cycles, the US could achieve 50% domestic supply security for critical minerals by 2032 and self-sufficiency in high-end semiconductors by 2035. That timeline sounds distant until you remember that the CHIPS Act passed only 3 years ago. Revolutions don't always start with marches. Sometimes they start with share certificates. Maybe history will call this policy the moment the United States rediscovered ownership, not of territory, but of capacity, confidence, and control. Factories hum again in places that had gone quiet. Miners and engineers stand on the same team as investors and generals. And for the first time in a generation, industrial strength feels like a matter of national pride, not nostalgia. No press release, no public vote. Just 5 deals in silence that may have changed the world. Because sometimes the loudest revolutions begin quietly, and this one is still growing.